So, good afternoon, everyone, and welcome to our session on the art of selling in FinTech. My name is Sada Abdullah Communications and member manager for Mauritius Africa FinTech Hub, and I'll be guiding today's session. As FinTech continues to reshape the financial landscape, understanding the right sales strategies is crucial for success. In today's session, we will explore key aspects of FinTech sales, including customer behavior, effective strategies, and practical tools to enhance your sales approach. I would like to introduce our esteemed speaker, Nicole Anderson. And Nicole Anderson, who founded Red Set Ventures in 2013 with a vision and passion for innovation in financial and social inclusion. She held C-suite executive roles at global technology giants such as SAP, HP, Cisco, and Sage Software before dedicating her entrepreneurial journey to designing and investing in FinTech and CleanTech. Over the last 9 years, Nicole has worked across 20 markets, leading projects, helping build, scale, and fund ventures in wealth management, pension, and savings, mobile payments, sustainable investment, and digital assets. In the past 4 years, she has driven innovation at the intersection of data infrastructure, energy, and digital inclusion. Nicole is highly active in private market funding, working in both equity, debt, capital allocation to support ventures in private and public markets. Additionally, Nicole is the founding board member of Mauritius Africa FinTech Hub, and Nicole brings a decade of real-world experience. We are happy to have her share insight on mastering FinTech sales. Before we begin, I would like to encourage active participation for all our members. Please use the chat box or raise your hand if you would like to address any questions throughout the session. I'll now leave the floor to Nicole and wish you a wonderful session. Thank you very much.
Thank you, Said, for a wonderful introduction. And good afternoon, everyone. Lucky you in the warmth. I'm sitting here in a very chilly February morning in the UK. But spring is on its way. So it's wonderful to have the opportunity yet again to exchange with you all. And from what I know, the audience is very diverse, which is fantastic, because what we are going to try and do today is extract value across the whole spectrum of FinTech as it pertains to actually successful commercial engagement with customers, whether that be retail customers or B2B customers. So I was very amused and somewhat excited by the fact that when Said approached me to deliver this presentation, the thing that popped out for me immediately was the use of the word art, not the word science. And so for any of you that have, delved into methodologies and modalities and frameworks for selling, it wouldn't be a strange thought to have that actually there is a particular way of going to market and being successful in selling. But in my experience over all my career, both as an entrepreneur and in a corporate environment, I have got to a very kind of basic, humble position, and that is that selling is very down to the individual. And the three qualities that really stand out, besides all the things we're going to talk about today, is the individual, the person that is able to empathize with the customer, of course, always deliver what they say they're going to deliver. And the other thing is being able to extract and listen more than talk. And that's hard for a lot of the traditional, let's say, egos in sales. So I'm coming to this presentation with a very holistic approach, with the aim to give you some technical, I guess, guidance and ideas. And this is all from me being a practitioner in FinTech for a fairly long time, but also hopefully leaving you with loads of encouragement, loads of different ideas to take away from today. The other thing I'll mention is I have produced some slide notes for the session. So don't feel that you have to scribble down too many, furiously too many notes. Each of the slides are very light visually, but they pack a punch in the notes. So, just hopefully you can sit back, listen, and absorb. So I'm going to move on. So we are living in a time like never before. So FinTech has always been an industry, and it feels like, it's decades old, but actually the FinTech we know today is probably only 11 to 12 years old. So it's still a fairly new industry. And even if it's short term, it's short lifetime, it's just been an electric industry to be in. And I'm sure you'd all agree with that, right? At the height of innovation, and led by predominantly the way in which technology can create new business models. I remember when I started my FinTech career, I literally fell into it. I left corporate life. I was done with corporate life. And London was just beginning to ignite around new, like a dearth of new ideas around how to bring financial inclusion to the masses. This was post the 2008 crisis, so around about 2010, 11. New money started coming into the market. And of course, innovation always follows the money. I was very fortunate. I was in the right time at the right place. I didn't really have a financial background. I had never worked in finance, but thankfully, as a technologist, that stood me in good stead. And I found myself working in and around amazing minds, which I have to say and pay kudos to, have helped me along the way. And I've never stopped learning in this industry. What we've seen over the last 11, 12 years is a huge evolution across the entire financial landscape. So when I started, FinTech was just payments, all right, fundamentally. And I have to say, I mean, that is actually now, I would say, having its own renaissance in terms of market infrastructure, but at the time it was very much just new rails and very consumer centric. But then we had the shift, to more embedded solutions, a range of consumer solutions around credit, obviously with tightening liquidity. Post 2008, the crisis, I'd argue in the last 4 years, we've had, the same history repeating itself, but obviously the lending FinTech ecosystem blossomed. And then we saw the likes of newer frontiers, right? So insurance was a big one. We saw the early attempts at looking at the kind of, I guess, the more niche spaces such as wealth management, and then the deep move into B2B FinTech, right? And of course, one area which is very close to my heart was decentralized finance. So, I've been around it all. I've seen the waves and, the hype cycles. So I wouldn't say, and again, I wouldn't say that every wave behaves exactly the same, but there are definitely patterns. So a massive, evolution in the last decade or so. And more so, I think, as we've seen in the last 4 years, with a very different landscape emerging. So rather the innovation coming within the industry, we're seeing the pressure points coming from outside the industry actually now emerging as friction points and as a new tipping point. So I think 2025 presents an incredible opportunity for the industry. And I don't have to say that this is a crystal ball that I have. I think it's very evident. Last year, I was, actively involved. I have a number of projects. I have my own business. I was actively involved in fundraising, and it was colossally difficult. It is amazing how within a short few weeks of this year, things are definitely changing. And there are two individuals on the screen, I'm sure needs no introduction. But when you have a billionaire and a president, all right, of the most powerful nation in the world, within weeks being able to ignite enthusiasm, break down regulatory hurdles, and themselves introduce innovation into their, let's say, their existing portfolios, you're onto something, right? So I'm sure you are all very familiar with Twitter. Elon has announced his own payment rails into Twitter. So just as Facebook payments, you will now be able to use Twitter, certainly within the US and initially, as a means of payments. So a really very powerful play. So one way for him to effectively monetize, which an investment which has been, loss-making for decades. And then for those of you not aware, Truth Social is the equivalent to Twitter, and now President Trump introduced that through his multinational company a few years ago, in the aim to kind of spur on free speech. Well, anyway, that conglomerate has announced probably about 3 weeks ago their intent to actually launch truth.fi, which will be a multi-line financial platform with a big focus on crypto. So very, very interesting times. So I want to touch on some of these macro events and how they could affect the industry, some of the stall marks around looking at your customer, understanding your markets, understanding how technology can be used as a magical mechanism for innovation, but of course it comes with risks and challenges. How to turn regulation into a favorable tailwind, not a difficult headwind, and then of course look at broader opportunities in terms of how you engage pricing strategies, how you lock and load and defend against competition. So if we then just start with, I think, the very basic aspect, which is in sales, it's all about the customer. And that is a perennial code. It is cast in stone. The customer is never wrong. Some would argue, well, sometimes we have to educate our customers, but certainly understanding the customer is an incredibly important foundation in the whole sales cycle. And customers come in a continuum. And so what I've tried to do here is really aggregate the way in which certainly you could be looking at your customer segmentation, but moreover, actually going from these kind of large, I guess, segments of customers and then drilling down into personas. So this audience represents a broad array of industry stakeholders, right? So incumbents and entrepreneurs and innovators. So I would imagine amongst you're either involved in B2C FinTech solutions, building them, running them, or you are involved in B2C or in B2B FinTech propositions. And therefore, this should be no secret to you. These customers are completely different, and they are both tricky segments to get right because of a number of different factors. But if we look at, basically B2C, fundamentally, the key things with B2B selling is, generally speaking, this is about scale and about volume. So one of the key challenges in getting your segmentation right is understanding how you classify customers into broader profiles so that, the demographics of the customers play into your hands. And sorry, am I echoing? I think I may be echoing. Yeah. So B2B, B2C, key thing is, acquisition and scale. That's, fundamentally a stalwart of really being successful in this market. The other key thing to get right when you're selling a product into B2C is simplicity. And in fact, certainly in the UK, but I think it would be the same in Mauritius, the ability to simplify engagement, not just in the user experience, but in the way in which the language used to address your market is really simple and understandable. So, you know, we have a very strict consumer duty regulation in the UK, and I'm sure, you know, that's the same in Mauritius, where how you address the consumers is incredibly important. And so, you know, many a startup has to consider that. They have to consider tone of voice. They have to ensure that, you know, whatever they say is responsible, and that consumer duty often impacts and should impact product development. And then there's the big thorny area of, as I've said, is compliance and security. We are now in the age of, I would say, an epidemic of fraud. And the level of sophistication of fraud globally is so, I mean, it's just, I mean, if it wasn't so sad, it would be very impressive, right? So last year I did a huge piece of work on financial crime across the globe. So I was looking at trends in financial crime. And one of the big emerging areas within financial crime is scams. And scams are becoming so sophisticated now that they've become industrialized. So I do some work for an Australian bank, actually, and it was very interesting. Some of the people within the banks came from intelligence backgrounds. So the banks were needing to hire people either from MI5 or the defense industry to really begin to build very sophisticated understandings of and how to kind of defend against this industrialization of fraud. Needless to say, one of the hotbeds of the industry is in Europe. And the reason for that is in Europe, because of the multilingual concentration of people in a specific area, the ability to run call centers, I hate to say it, for fraudulent activity is much easier. So anyway, I could go down a rabbit hole on fraud, but you know, this is a massive issue in terms of B2C, and it's certainly not going to change. So that's a big one to consider and prepare for, and you know, I think it'll be a big chunk of your investment dollars, the length of time, your exposure points as a B2C proposition. B2B, completely different world. There, some of the challenges are obviously will be regulation if you are delivering to the industry in a regulated capacity, but not always. I think the thing for me is, and I focus predominantly on B2B FinTech activity, mainly because it's my core strength, and in some ways it's easier to work a value proposition than a volume proposition in complex markets and mature markets. It's a deeper market in Europe, so B2B is a deeper and a wider market in Europe. But the challenge there is, you know, you've got very long sales cycles. You've got, you know, very demanding customers, whether they be corporates or other financial institutions. You are looking at a big challenge around integration with legacy systems. And so you naturally have to prepare for selling into this, you know, complex and mature space, right? Harder to make a mark, so to speak, but of course very valuable when you do. So I'm sure all of this is very familiar to you, but of course these call for very different mechanisms and modes of sales and selling, and of course the types of resources you have to put into your go-to-market. One of the key things that I think is very useful when looking at your market segmentation, whether you're B2C or B2B, is to put a lot of attention into your buyer persona. And this is in and of itself really a discipline. Now, what I've got up on the screen here is just a B2B buyer persona. What I've done in the notes is I've actually gone into a lot more detail. I'll tease that out a little bit just here on how to actually sell to specific personas. But, you know, really getting under the work of who your buying center is and what their needs are seems, you know, trite and sometimes, you know, probably so arm's length, you know, unless you come from the industry, how do you know? But it's vital. It's really vital to get this right. And things like, you know, how you communicate to them, what their, you know, what the context is for them in their particular industry, what their own measurement and criteria are for success are very often very important to consider if you can make them successful. And of course, the flip side is they'll be very risk averse if they think there's danger or concern in terms of engaging with you or promoting you. So there's a whole lot of psychological analysis that potentially could go into a buyer persona, but then there's very practical structural things that go into looking at the buyer persona and how you sell into them. But if you take, for example, a couple of personas. So if you take, for example, the CEO of a large, let's say a large corporate, their primary concerns are going to be competitive advantage, revenue growth, scalability, probably risk management is going to be a key thing, certainly in financial services. So the sales approach there is really helping them, you know, mitigate risk, helping them get a strategic edge over competition, and by default, obviously looking at top line growth. Any of the attempts by you to ignore those are likely to not succeed, right? But if you then went and had a look at your CFO, of course, that's a very different set of criteria. There, they're looking at ROI, they're looking at cost savings, they're looking at reducing operational expenses. Very often, they are looking at ways in which they can harmonize pricing structures against vendors, all right, and how they can gain efficiencies. So, you know, there you really have to talk, like, front and foremost, take a value engineering approach. By that, I mean actually working out business cases for how your proposition can bring them, you know, either top line growth or bottom line reduction. And then, you know, many people in the industry like to kind of stack up I guess the kind of top 10 or top 5 main drivers for how decisions are made. And at the very top, nothing sells like, you know, the need to have to sell. So if there's any regulatory pressure, compliance generally, any compliance requirement, that's a tailwind behind you. So if you can use regulation to help drive the sales cycle, brilliant, because that's often a must to have, not a nice to have. Then it'd come down to revenue generation and then cost efficiency. In my experience, those are the, you know, in that typical order, that's how it plays out. If, you know, and then again, it depends on, you know, whether the market is in a contraction space or in a growth space. The last two could flip around. But those are the kind of three ways to look at things. In the notes, I've covered off the CTO, I've covered off the compliance officer, I've covered off the head of operations as well. So this first section is just helping you frame essentially who's the customer, how do I ensure that I'm ready to enter the market by understanding who I'm selling to at a macro level, and then if possible, and I think certainly in a B2B perspective, be able to steer and refine your selling strategy to your stakeholders in your buying center. Side.
Yes, we'll now open the floor for questions. If you guys have any questions that you would like to address for this first section, you may come on screen and anyone? If you don't have any question following that, I do have two questions that I would like to address to you, Nicole. Um, how do you think FinTech started build trust when entering a highly regulated market?
Sorry, Saad, it's a bit fuzzy there. Could you repeat the question?
Let me rephrase the question. What do you think is the biggest barrier to FinTech adoption today?
I think the biggest barrier to FinTech adoption, if you're looking at B2C, I think regulation is getting very difficult. It is, we're now looking at so many considerations and the intersection of other factors. Just one of those, for example, is the impact of artificial intelligence on the ordinary individual and what that means for their world when it comes to a financial product. You're seeing institutions having to not only deal with the realm of regulation that is classically associated with essentially retail products, financial retail products, but now they're having to adhere to digital safety, and they're having to adhere to potentially now new frameworks around artificial intelligence. So I think being able to really capture and de-risk to satisfy the regulatory challenges in B2C is the biggest challenge, just because of the climate we're in. On the B2B side, I think for me, I think the biggest friction is being able to demonstrate, number one, how in a fairly mature market, how you can create top line growth in a B2B cycle. And then secondly, integration. Every bank has got legacy systems, more legacy than we'd like to, admit sometimes. And I personally have experienced huge amounts of difficulty, even with a far superior proposition, if it's B2B, if the intent and the ability of the institution or corporate to mobilize teams to look at ways in which a solution can be integrated or adopted, fantastic. But generally speaking, that takes a long time, not impossible. And I think the lesson there is you just have to prepare for that and put extra effort into that integration and interoperability agenda in the sales cycle. You're on mute. Sorry, Said.
Thank you very much for this first initial answer to my question. Can you share an example of a successful FinTech product that overcame initial skepticism?
Oh, gosh. I mean, I hope it's not a boring one, but I still am astounded at how they've turned the gear and just shown such exponential growth. So my favorite example is Revolut. So, I know Revolut from when I came into FinTech. Revolut were based in the same building that I worked in. And, they were just one of, like, I would say not dozens, not hundreds of FinTechs. And they had an incredibly, difficult time as a emerging neobank, all digital bank. They went through probably 8 years of real struggle in terms of both customer acquisition, regulatory hurdles, yet they fought through. They had also some big, quite famous fines and compliance challenges, but they pursued. They were well funded and they were well backed, which of course helped. And then last July, I believe it was June, July, they formally received their banking license in the UK. And it was like all the friction fell away. So I am a big Revolut user. I bank with them both on a personal perspective and a business perspective, and talk about a frictionless experience. So, because they then finally achieved their full banking license, they could go into multiple markets. And all the challenge of moving money from a Revolut bank account to another bank account or vice versa just went away. We're now at a point where Revolut have an investment management license in 30 countries. They're looking at, and they've always been very crypto friendly. So it's a seamless experience moving money from a crypto exchange to Revolut and vice versa. You can even buy, obviously, you may know this, crypto through Revolut, very expensive. But they also now have they're apparently in the process of launching a digital private bank. So I think that's like a real zero to hero story, very iconic story. And the last thing I'll say about Revolut is they now sit in a building that's bigger, right next door to Credit Suisse. So they have a bigger building in London than Credit Suisse. If that's not a symbol for success, I don't know what is.
Thank you very much for the scale of your the question. I would like to proceed with the second part of the session, that is key setting fundamentals. I will leave the floor to you, Nicole, to continue. Thank you very much. If you have any questions, please do type in the chat box, and we'll attend the question throughout this discussion. Thank you very much.
All right. So in this section, I'm basically going to get down into some of the frameworks, some of the tools, right? With the caveat that I am basically I wasn't trained to be a salesperson, but you quickly learn how to kind of capture an audience if you have to. And because I've had the benefit of being surrounded by, sophisticated, let's say, dyed-in-the-world salespeople in a corporate career, then moving into, the world of entrepreneurship and then investing, I've began to kind of think, oh, I remember us going through some of these fundamentals. And some of these frameworks and tools have become very useful to me. Certainly, this is not a comprehensive list of all the sales tools and modalities that you could be using, but they're practical and they're a really good starting point. So, I mean, when you are looking to essentially organize your sales function and your sales activity, I think the key thing to remember is that sales is not about an individual, like the classic, like individual, wearing down the leather of their shoes, pounding the pavements, knocking on doors. Nowadays, it's obviously all digital and potentially quite a bit of it is online. But you know where I'm going. The sales cycle is a cycle, and it begins with way up front, okay, in just as we've started thinking about the customer and really the development of your proposition. So my view is a selling DNA should be throughout the organization. And in a younger business, a more emerging business, everyone is in a sales position, whether you're an engineer, whether you're a PA, whether you're in marketing, very important, or actually have the label of sales. Everyone is in a position. It needs to be able to position their company and be passionate about it. So the first key thing I think we need to ring fence when we're thinking about a fundamental is knowing what product market fit is for you and your company. And by the way, this is an iterative process and continues for the lifeblood of your business. So product market fit is really understanding first your market, the customers in your market, and ensuring that you're designing a product that actually appeals to them, right? Sometimes, and it's normally not always the case, in fact, it's quite rare, you can design something for an industry that no one thinks they need, but when you launch it, suddenly people want it, right? That's the ultimate, top quadrant. And that's the kind of Apple scenario, like Apple iconic story, right? They've designed products that people didn't think they need, and then they become hooked, and now we absolutely can't live with Apple products. Well, I can't. So product market fit is a really great place to start thinking about fundamentals when you sell. And so we've touched on some of the customer pain point thinking. There is no shortcut here. So, market research, market panels, I've found very useful in B2C scenarios. People feel like really, are we going to be able to get people, just ordinary people engaged in our work? Well, you'll be surprised how many people, just ordinary people, love being part of focus groups and being able to share ideas, etc., etc. So however you go about gaining customer insights on a B2C in a B2C world, it's very important. On the B2B side, there, generally you're talking about a value proposition that has, deeper, it's deeper and wider in terms of cost and investment and sales cycle. But of course, your audience can be quite contained. So generally speaking, and they're, being able to, and it's hard, I know, because I'm actually currently in this exact phase, is getting the first few customers or prospects, I should say, to buy into some testing phase with you, call it proof of concept phase. And there are ways to do that. And there's, again, we probably could run a whole webinar just on testing, validation, and proof of concepts, and how to extract value, and also how to ensure that you don't get caught in this vicious cycle of giving away too much for nothing. But these are vital parts of any emerging business's journey in FinTech. And I would hazard a guess on the B2B side, your first few proof of concepts may have to be all give and a little bit of get, i.e., you're giving of your time, but you are learning a huge amount. So it's really an investment. But as you move on, and the more you learn, the more you're able to potentially commercialize those insights, even for future POCs, right? I mean, there's some companies that always do POCs, right? And then if I wish this is the case for all of you, if the pockets are well, well oiled, and there's, you've got strong balance sheets, you may offer up, all right, these discovery phases, these try before you buy models for all customers, but then you've got real confidence in the product. B2C side, you see a lot of the kind of freemium, approach to gaining at least mind share, branding, brand recognition, but also data is vital in both scenarios. So really, first of all, is understanding the customer pain points. You cannot do that theoretically. You have to engage with your market. And hopefully I've described ways in which you can do that. And then, as you probably have all read, the classic, right, the lean startup, that is really like an absolute, message I have to leave with you is do not build something and think they come, because you just can't do that nowadays. The whole classic waterfall approach of building and then, going like bit by bit is assumes that you build a large part of your proposition and then incrementally build on top of that. It's a disaster, generally speaking. It's much better to design and build and run and iterate and test in modular, smaller increments. So you minimize the risk, but you maximize the insight. And each phase of the next design, build, and run becomes more de-risked and more successful. And however you measure it, probably larger in scale. And this therefore allows you to iterate and test your assumed value proposition to essentially what becomes your outward value proposition. So it is an exercise, it's an iterative exercise, but absolutely vital. Proof of market validation is the thing that you have to keep on at. And by the way, customers also change, markets change, regulatory forces change. And to my earlier point, geopolitical forces are changing. And I have to say, I've never worked in a time in my life where one of the top risks I'm looking at is geopolitical risk. It's like right up there. It sometimes tops my financial risk thinking because it drives everything and can move markets. So these are critical things to think about and to do frequently, because we're just living in a world that is full of change, and so our customers are changing. Then I just want to touch on sales go-to-market. So people think, oh, you know, I'll just get out there and sell. To my earlier point, sales begins way before people are out there actually knocking on doors, whether it's physical or virtual. It begins with your brand. It begins with how you think about how your brand lands with people, the tone of voice and the language you use for your proposition, product, or platform. It starts with essentially the message you take out to market. So your marketing and communications function is a vital part of the wholesale cycle. So many resources are involved in making sales, which is generally a very costly resource, as efficient as possible. The last thing you want to be doing is using your salespeople to do marketing. Normally, they're very bad at it, but it's a very expensive way to do things. There is a gray zone between marketing. I don't want to say gray zone because I've done that job for a long time as well, and sales, which is business development. People use it interchangeably. Sometimes people think business development is marketing, and sometimes people think sales is business development. But actually, business development in larger organizations is actually a key discipline. And I'll explain that on the next slide. But the business development role is there to qualify, right? So marketing is there to drive essentially resonance, brand, engagement. Business development is really the turning of the dial in the first level of qualification to something that is turning an opportunity from possible to probable. And then your sales function kicks in to convert the sale, right? I won't go on to post-sale, but obviously, for all sales cycles, the most important thing and the most valuable thing is a customer. To lose a customer is very, very expensive for any business. So post-sale and support is vital because very often you can go back to that same customer and upsell or cross-sell. So there is obviously another extension beyond the physical initial deal in selling. So I'm very passionate about this because I think it's super exciting. I think, it means that you turn the passion for the product or the proposition into something that is very sticky. You ensure that you're using the right resources and planning for impact at the right time, and that your selling function, is really designed as excuse the phraseology, heat-seeking missile. Your sales should be there to convert. They shouldn't be like running around and organizing events, and sometimes it's a must, but I don't know. I just think they're normally not very good at it. And secondly, they have their own special corner where they're geniuses, hopefully. And then the two other things I wanted to kind of raise around go-to-market is direct and indirect. Now, this may or may not be appropriate for a fintech proposition that you're involved in, but I think, people sometimes get the two muddled. Sometimes people don't see the value in indirect. So obviously direct is you take responsibility for finding the customer, opening up the market, converting the customer, and retaining the customer. Indirect is where you learn to partner for success. And there are two different ways in which you can sell indirectly. One is you can sell with, so that's generally where you partner with someone who knows your market, but is selling in a different way and has a different proposition. But the two propositions together, or the two services together, have a really high impact, but you are targeting the same customer. Okay, so a classic example would be working alongside a system integrator, or a consultancy that knows the market. They need to, develop a strategy for a customer potentially. They know a lot about the industry, but the execution and the solution comes from you. The other way, and I don't think this is that common in fintech, but it does appear, is a channel. So selling through another entity, so you never really get to touch the end user, but your product is distributed at scale through someone else. The best example of this is embedded finance, right? Where another large, normally quite large player in industry, like a retail company, an online merchant, large scale, wants to embed financial products into their proposition. They have a market, they're just not, financial. They don't have financial products and they don't have financial expertise. And that is a whole different discipline. It's a massive area. I'm sure you're all very familiar with embedded finance, all kinds of regulatory considerations, but that is a channel model. And so you've got to think about what works for you and the timing of each. And certainly, they could be different in certain geographical markets as well. Home markets are generally direct, new markets, potentially you want to go indirect. And then I'm just mindful of time. So this classic sales funnel, I think this is pretty self-explanatory. I don't want to, kind of go over, teach you just like eggs, but, again, a discipline of having this, maybe not totally in practice, but certainly in intent is very valuable. It just makes your selling function that much more efficient. So I talked about, the various roles. So the top of the funnel is the marketing responsibility, awareness, events, branding, PR, lead generation campaigns, all very, very important aspects of getting as much coverage as possible, refining that through a business development discipline, which is then converting those marketing qualified leads into sales qualified leads, and then pushing those qualified leads, which are generally like a probable to a possible range. And there's, a whole discipline about undertaking that into the pipeline for the sales function to execute on. So yeah, that bottom of the funnel is the most critical. It's often the most expensive in terms of headcount, but of course, that's where checks are written. So I'll stop there very quickly.
We do have a question from Lloyd. If you would like to attend that, how can you adapt your sales approach in P2P lending when key market data, such as a borrower's liability or a person's willingness to lend, can only be obtained from the client themselves? It's a question from Lloyd from FinTech.
Yeah, I'm just gonna, sorry, I don't know why I'm struggling to hear you clearly, Said. Is it in the chat? Maybe I can read it. Let me just see if I can, sorry, let me just, or do you want to just repeat it and I'll come very close to the screen?
How can you adapt your sales approach in P2P lending when key market data, such as borrowers' liabilities or a person's willingness to lend, can only be obtained from the client themselves?
Okay. So, this is a very interesting question. Peer-to-peer lending has become so, it's gone through so much. I think it's one of those segments in the fintech landscape that's probably been the toughest to succeed, and yet it has so much potential. I think personally, I think the friction point for peer-to-peer lending is, it's a two-sided marketplace. So you are looking certainly on the distribution side. So whoever's underwriting the lending, I mean, I wouldn't say that's easy, but you generally, that's where you start, because obviously you've got to be able to offer up that capability, that resource, essentially that liquidity to market. On the other side of the fence, you're dealing with generally consumers who have tried different options in terms of access to credit. And there is this long tail of bad actors, so to speak. I think they still continue to play, where if you really want to kind of capture confidence, there is an education element to peer-to-peer lending that I think probably has its own financial education. Financial literacy is a constant thing. So in the world of it performs a very important function, peer-to-peer lending. I think for the consumer side, being able to educate, simplify the area of consumer duty has to be paramount. All of those would aid friction in success at the market. And look, it's mature enough to look at various other successful examples and failures from other players. So I'm very happy to kind of take that offline and give you some examples that I think have gone through the mix, but actually have come out the other side. You're on mute. Sorry, Sahad.
I hope that does answer your question, Loika. And if so, we can have the one-to-one session with Nicole, where you can elaborate more and have more in-depth answer to your question. We do have another question from Vikash. I would like you to come on screen, Vikash, to share your observation and have your question.
Can you hear me now?
Yes.
Yes, I can.
Yeah, if I can help in answering Loic's question, is in Mauritius, if you're lending, usually you have access to the MCIB, Mauritius Credit Information Bureau. So basically, you will know exactly what the person's liabilities and so on are. So if that may help. Secondly, one observation that I had is having worked in marketing and sales for 20 years, I find that there's always that friction between sales and marketing. I don't know whether you found that where you work. If you're in marketing, you're always blaming sales, and if you're in sales, you're always blaming marketing. And one of the ways that I tried to overcome that in the past was to start with understanding the customer journey, and showing to everyone in the sales and marketing teams what's the customer journey, where we fit in, whether it's sales or marketing or whether you call it business development. And would you agree with that, Nicole?
Oh, 100%. Yeah. I mean, these silos, the larger the organization, the natural the silos are. What I think works to overcome that friction is areas of combined measurement or KPIs. So, people are incentivized always to either collaborate or not. Generally speaking, commissions are the domain of salespeople. But when I've ran business development and marketing teams, I've worked on ways in which marketing has their measurement KPIs, BD does, and sales does. And there are these integration areas, these handover areas, and there is common KPIs, which then does, I think, pull things together, operationally at least.
Absolutely. Thank you.
I have a question from my side. You did talk about the customer target. My question to you would be, what role does customer education play in the sales process?
I think it's paramount. So first of all, FinTech, whether it be consumer or B2B, education takes different forms, but it's vital. I think we've covered numerous examples today of how financial literacy in a very complex financial landscape is not only essential, but it's actually becoming a key thing, or has been a key thing for regulators. And by the way, market contraction, the cost of living crisis, call it, financial well-being, are enormous topics. Things have not got better, they've only got worse in every single market I know of, right? So things are getting harder for the individual, and therefore access to credit is very likely and needed, but that comes with a huge level of responsibility. So there is that aspect. From a B2B perspective, especially if you look on this particular slide, I was just going to kind of cover these points off. But we're now at an age, and I think this is why I think this year is going to be so exciting. We've got so much going, so much ahead of us in terms of fundamental, massive shifts in the way in which the technology direction is going to go. I mean, I'm working in a deep tech program at the moment, and I'm looking at some of the quantum innovation, and it's not far off. It's incredible. Like it'll blow your mind what people are working on, and its application to all industries. We know what AI is going to do and is already doing. I mean, look at Klarna, one of the biggest fintechs in the world, about to IPO. They've laid off half their sales force because they think they can actually deliver through AI-powered, engagement to the market. Let's see. But fundamentally, we are living in this huge, technology like rich cycle. We've always been in it, but now I think we're just going to see it go supersonic, which means everyone is learning at the same time. Your customers, probably you are going to have to educate your customers. I mean, AI is another perfect example. Just the data and the approach to data. I mean, it's an absolute minefield when it comes to AI. So be prepared for that. Be prepared to anchor your clients, be a custodian to your clients. Make sure you get to be in the seat of educating your clients ahead of the competition, because someone's going to have to do it, right? And the more they know about you, the closer you are to building trust and hopefully converting them as a customer.
Thank you very much, Nico, for this clarification, and hope that helps to all our participants today. I'll leave you to the final part of the presentation, and we should conclude on that. Thank you very much. You may continue.
Okay. I'm mindful we're 1 minute over. So, I mean, I'm not going to go through all of these again. You can refer to the notes. There's plenty in there. But just strategically, how do you differentiate really is where I wanted to leave. Like, how do you stand out from the crowd? Well, obviously, niche markets, I think very appropriate for Mauritius. I would say you continue to have the opportunity to play in markets that are challenged, but certainly not saturated, maybe is a good word, right? So niche markets, way to diversify. We've talked about technology innovation, the technology advantage. You don't develop a technology solution and then try and find the problem, obviously, but how do you stay ahead of the technology curve? And the AIification of everything is a massive topic. Strategic partnerships. Do not act alone. Embed yourself in as many people that can cross-refer you as possible. So ecosystems are incredibly important. This is an ecosystem for you. And I think within Mauritius, you're well served on that. And then, as Anderson and Horowitz said, the very famous VC has said, the fast eats the slow. So speed of execution is vital. And this is where, incumbents struggle, but, fast-moving fintechs do not. This is, expected to be able to move fast, iterate, learn, develop and run. And then finally, some other very brief points. Pricing. This is a discipline in and of itself. There's a whole range of ways in which you can offer pricing strategies to hook clients in the nicest possible way, to help them, think about how they get agility and harmonization across their technology estate. There are ways in which, the big tech giants incentivize pricing strategies for smaller companies to build on platforms. That could be a whole topic in and of itself. We've talked about using regulation to your advantage, be on the watch. I don't know. It's kind of a funny phase we're in the world. Are we going to see less regulation, potentially more? I don't know, like watching brief, but it's a driver for markets for sure, either way. And then competition. What is your competition today could be actually, a co-opetition going forward. The world is, very complex, and often individual propositions develop and find that they meet halfway. So competition is the competitive landscape is not as clear and black and white as it used to be. But be neurotic about it is my message, right? You can learn from your competition. Competition is a really good thing. It gets us off our rear ends and gets us into action. And of course, it's good for the market, right? So, you know, be neurotic about the competition, learn from them, and potentially down the line, you may find you can partner with some of the people you are in competition with today. So that's, I mean, that's really it from my side. I just wanted to leave you with the fact that, first of all, congratulations, you're in an amazing industry. I would say that, but I truly believe that we're in such exciting times. FinTech success is not just about technology. It's about really being able to make an impact on your customer, and you know, ensuring that your sales DNA is something that your entire organization embraces and potentially is measured on, I think will go a long way to helping you accelerate your go-to-market. And then finally, you're never an island. So the winners in FinTech are the ones that have paid specific dividends to building networks around them, building a network of influence around them, building partnerships. And so I think, you know, when you sell, think about buddies that can help you gain traction, and good luck.
Thank you very much, Nico, for this beautiful session. I would like to reflect a little bit on the overall on this overall session. I do have one last question that I think everyone can make the most out of it. What are some of the best practices for positioning your product as a must-have rather than a nice to have?
Lovely question. And it's a difficult one, because I think as market, you know, market needs and customer needs change, what may be a must have and a nice to have also changes. But I think at a very high level, when you're looking at either your existing business or a new product line, or, you know, new market entry, you really have to do your white space analysis. Being incremental, i.e., you know, building on something else may serve you for a while, but then you generally risk being just a nice to have, right? So first of all, you know, white space analysis, whether that's in a market or a product segment based on your customer needs, is a shorter way to ensuring you're creating a must have. The other thing is, you know, where there is a particular pain point in exposure for a customer, that's generally, you know, selling into risk is a big must have. It's always at the top of my list. Where does your customer stand to be, you know, either have mission critical exposure, have regulatory pressure or fines come their way, stand to lose out big time against the competition, stand to be too slow to address their market? Those are areas of risk. And risk is not just one thing, okay? You've got many things. You've got operational risk, you've got financial risk, you've got geopolitical risk, and the list continues. So, you know, think about risk as a really good way to ensure that what you are doing becomes a must to have.
Very much, Nicole. I think that's one of the most intriguing question that I had throughout this session that I was inviting me and burning me for me to ask. I would like to open the floor if you have any questions from our participants before we close out this session. Any questions? I think don't have any questions. Thank you, Loic, from your side. I would like to sincerely appreciate each of you for being here today. Your active participation inside the collaborations are what make this community thrive. It's through your engagement and your continued success to foster meaningful discussion and drive innovation in tech sales. that we kind of draft those kind of sessions. We hope that you found today's session, the art of selling in fintech, both insightful and practical, whether you're refining your sales strategy, exploring new techniques, or strengthening your approach to client engagement. We hope that you are leaving with a valuable takeaway, that we can make a real impact in your work. To ensure that you get the most out of this experience, we encourage you to take the next step by scheduling a one-to-one session with Nicole by contacting me, and I'll be happy to make the necessary arrangement for me to put you in contact with Nicole. This exclusive opportunity will allow you to deeper into the specific challenges, receive tailored advice, and refine your fintech sales strategy with expert guidance. We are happy to support your journey and can't wait to see the innovative approach you implemented moving forward. I would like to thank everyone for being here today and see you all again very soon. Thank you very much.
Thank you, Nicole. Thank you, Sad.
Thank you.
Thank you.